Senator Moran.
Mr. Chairman, thank you very much. I had no intention of going down the path of your confirmation process, except I now respond to my colleague from Ohio. Whether or not Mr. Cordray was confirmed had no effect upon the consequences of Dodd-Frank to Wall Street, and to suggest that at least I had refused to confirm Mr. Cordray because of my protection of Wall Street, I find unfounded. And I can't imagine that there's not a constitutional issue about what Article 2, Section 2 of the United States Constitution means when it says the President can make appointments when the Senate is in recess. So that issue is certainly presents itself. I don't think it presents itself today. It has presented itself. It will present itself in court. And I didn't intend to use this hearing as an opportunity to rehash this issue, but I do want to respond to the gentleman from Ohio to indicate that I simply disagree with his premise about those of us who found fault, not with Mr. Cordray, but with the confirmation or the lack of confirmation in the President's appointment. Mr. Cordray, I did not hear but understand that you responded to Chairman Johnson about community banking, and I appreciate hearing that. I would indicate to you that in my short period of time as United States Senator, trying to get a regulatory environment in which community banks can lend money to credit-worthy borrowers has been a cause of mine, and it seems to me that the regulatory environment in which they operate is oppressive and uncertain. And so your suggestion about appointing an advisory group of community bankers, of lenders to advise you, I certainly don't disagree, would suggest that's valuable, but I would only point out that at every opportunity in which I've had to question witnesses from the OTC, the Treasury Department, the FDIC, they've all done the same thing. They have those advisory committees, and yet the growth and regulations continue, and the sense by community bankers that they're not understood still prevails. So don't want to discourage you from doing that, but please, at least from my perspective, understand that that's probably not sufficient. It will depend upon your attitude and approach. And then in that regard, before you respond, our small lenders, community banks, credit unions, they need clarity, not only for their own sake, but for in my view, the ability to grow the economy. I do think that there is a lot of reluctance on the part of many small business men and women to make decisions because they don't know what next is coming from Washington, D.C., what the rules are going to be. And in regard to financial institutions, the phrases that have been around for a long time are pretty well understood: unfair, deceptive, but the legislation that created your position has, to bankers, to us, a new word called abusive. And my request of you is that before you find something to be an abusive action by any financial institution, that you take the full steps of defining what the word abusive means beyond whatever, in my view, minor definitions, lack of substantive definition there is to that word in the Dodd-Frank legislation, and would ask that you have an opportunity for public comment. I've seen examples in just recent days in which financial regulators have determined a practice that until that point was never considered to be inappropriate, but then go ahead and criticize a financial institution for that conduct. And so my request of you is to do what due process requires, if nothing else, fairness requires. Define what abusive means before you find some practice to be abusive.
So thank you, Senator. We will be careful about that. And to return to the issue of community banks and credit unions, I have a track record on this. I was a state and local official in Ohio. I've worked with the community banks and credit unions in Ohio. They know me well. They have spoken to the fact that they found me to be a pragmatic and listening person who was cared about and was mindful of their business model and how we could preserve it. I will say that the thing that hurt the community banks as much as anything was not too much regulation of them as a complete lack of regulation of many of their competitors in the mortgage market who didn't adhere to the same standards. Sometimes people would come in asking them for a loan that they knew was irresponsible. They would say no, and they'd see those people go right down the street and get a loan from someone who wasn't licensed or wasn't regulated and could just sell it on to someone else, didn't have to care whether it succeeded. They would be right about the loan, but it didn't matter. And they lost market share to those people. So our leveling the playing field between the banks and non-banks and the mortgage market in particular is very important to protect the community banks and credit unions. Beyond that, we will be, as I have said, we will be mindful of burdens we're imposing on them. We will listen closely to what they tell us about the effects on their operations, and we will do our best to take account of that. But the other thing that hurt the community banks and credit unions as much as anything in our lifetime was the financial meltdown, the credit crunch that toppled a bunch of community banks, caused many of their loans to default because of the deep recession we suffered. If we could have headed that off by a more sensible approach to these financial markets 10 years ago, community banks and credit unions could have thrived. Their model, to me, is the winning model. It is a customer service model. It's a community-oriented model. It's one that we want to preserve and encourage, and that's my personal background and viewpoint on it.
Mr. Cordray, thank you. It is, what you point out is accurate, and it is the community bankers who believe that they, in most instances, had nothing to do in causing the problem, but yet still are in the bullseye for additional regulation. My time has expired. I would only indicate that I am I'm the ranking Republican on the Appropriations Subcommittee for Financial Services, where we have responsibility for determining, at least initially, the appropriation for the SEC, the CFTC, the FTC, the Treasury Department. While you're not subject to our subcommittee's jurisdiction, I can't speak for Mr. Durbin, I would indicate to you a desire, a willingness to have conversations with you about the appropriations process through the Federal Reserve and your funding, if you're willing to visit with me.
Be glad to visit with you and glad to have our staff come and speak to your staff and make sure you know everything you need to know about what we're doing.
Mr. Cordray, thank you.
Thank you.
Senator Merkley.
Thank you very